answering your questions about retirement. It's Money Talk with Michael Eastham.
I've heard about mutual funds and exchange-traded funds. They both sound like the same thing. What are the differences between them? And is one better than the other?
Mutual funds and ETFs, or exchange-traded funds, are often conflated, but there are some very important differences that you need to be aware of. You see, mutual funds, you can only buy them once a day. That's after the market closes. And the reason for that is because a mutual fund is essentially the stock of a basket of other stocks, and that basket of stocks has to have a value. And that value is only created or established one time per day. It's called a net asset value. And it's the net asset value of all of the stocks that are owned by that mutual fund. Okay, so that's one very important aspect. You can't trade them during the day. With an ETF or an exchange traded fund, you can actually buy it and sell it during the day. So it's much more like a stock than a mutual fund. Another element that's different is the fee structure. With mutual funds, there are all different types of fees that can exist within a mutual fund. They can be high or low as well. There can be deferred sales charges that exist, or they can be upfront fees that exist. With an ETF, the fees inside of an exchange-traded fund generally tend to be a little bit lower. And that makes them a little bit more appealing, especially to various types of investors. So keep those two very important elements in mind when you're considering investing using mutual funds or exchange-traded funds as you walk down the road to your stress-free retirement. Thanks so much for that question, and make sure you like and subscribe this video so that you get up-to-date information on a regular basis.